Good afternoon, everyone. Welcome back to the daily market update show where I break down QQQ, SPY, and as well as what I'm seeing currently in the market, and as well as what's going forward and the sentiment of the market and support and resistance. And let's get into it. So right now we are looking at another inside bar today for SPY. You can see we did not break the low of yesterday. The low of yesterday was 410.23, and today was 410.24. So it's another inside bar. And yesterday I was talking about are very likely going to have a 4-hour equilibrium break within the next 2 days. So based on what it looks like, it's probably going to break tomorrow. You can see this is a lower high, lower high, lower high, higher low, higher low, higher low. So it's like a tightening range where it forms an equilibrium. And then once it breaks out of that tightening range, then we'll very likely get a spike in volatility and volume together at the same times. Whether which way it breaks, we don't know that for sure. But if we do break out of this rising wedge, this resistance, and this is support, the looking line. So if we do break that bearish, then we're also breaking the equilibrium bearish here as well. And that would increase the bear volume. So we need to see some bear volume coming in, just like we did at the end of today. And we saw some bear volume coming in at the last 20 minutes, 30 minutes of the day. You can see kind of like just starts a little bit here, and then you see all these bear volume comes in, and you can see, look at this, all the bear volumes here. So essentially, bears need volume for indices to drop. Bulls, not really. Bulls, you can just slowly grind up with low volumes. That's just how it works for indices. But it doesn't work that way for individual stocks, obviously. For indices, it works like that. And so what am I looking at going into tomorrow? So tomorrow, this is a retail's earnings report week. So today we had Home Depot with bad guidance, as well as retail's core retail data today. And the retail sector was red today. And so tomorrow, if Walmart comes in really bad, then it'll likely continue to direct down the retail sector. So we'll see tomorrow morning for does Walmart come in decent or not. And a couple of things I'm seeing as well is the market breadth was really bad today. You can see pretty much every sector was red. And the only thing that was holding up the market was Google and Amazon and Microsoft. That was it. Apple didn't participate. Nvidia did. And so it's now the big techs are doing intra-sector rotations, where the ones that ran already, Apple and Microsoft, are not, and Meta are not going up as much. And money is flowing to the ones that haven't ran as much, which is Amazon and Google. And they're playing a little bit of a catch up. But it's just the five of them doing their thing, and they can see the whole rest of the market. Look at the financial sector, everything's red. Technology, healthcare, semi was also red, but the only AMD and Nvidia was holding up the whole semi sector. You can see the rest of the semi sector was red, and you can see the rest of everything else is red. So we got to see how long can QQQ hold up the entire market, or it's going to join SPY on Team Bear, which is starting to look like it. Honestly, especially after today. If you were telling me this last week, I will say we maybe have another leg up, and that's it. So, but this week, after show you guys on the charts, it's easier to see. So, Tech QQQ. This is the megaphone we have drawn back like a month and a half ago, and still playing out. So we actually got above it today. So it was like a breakout, and we came back into it, which is not a good sign for the bulls. And I like the rising wedge rather than megaphone. So let's take a look at the rising wedge. Rising wedge just so happens to be coincides with that megaphone. So you see this teal looking line, resistance and support. So we actually broke out of the rising wedge today as well. You can see this top wick. And I was thinking, okay, this might be a breakout, and potentially if we come back into it, retest it, and bounce off of it, there's like a good chance we get to 330. But we ended up closing back into the falling wedge, rising wedge. So tomorrow, if we don't get back above it and we start closing below today's low, then let's see, good sign we're going to test the bottom of this rising wedge, definitely, because it's not even that far away. Where is it? Let's see. So that'll be 1% move downside to the downside to test that rising wedge support. If we do break that, very, very likely we're hitting the 120s. And Breaking that, we are going to 118. So we'll see. Gotta see that for tomorrow first. One step, one day at a time. And yeah, so what the bears like to see is what we saw today. Break above, bullish with no follow through, and the price coming back in to the pattern. So that's the first sign of just the very first sign of initial weakness. There's nothing, no red flags yet. You can see QQQ trend is still perfectly in the uptrend. Zero red flags on the daily uptrend, and there is um, nothing to worry about for the bulls at the moment, other than this mini red flag at the moment. So, but things could change, right? Like tomorrow we have a red day. We break below today's low. We back into consolidation again. It'll be into daily consolidation, just like what we had here. Break below the prior day low. We're not back into consolidation. And if we do break today's low, we are into consolidation. And if we do break the pivot low, the prior pivot low, then we are back into a neutral trend instead of a uptrend. So that's the next step bears need to do. Break today's low, and then after that, the next step after that is breaking the pivot low, prior pivot low. So one step at a time for the bears, and for the bulls, you are still in full control. You do your thing. Let's say we set up pivot down. Sorry, a consolidation, a higher low, and then there's just another chance you can potentially we go higher, right? So as long as the chart tells us there is no red flags at the moment, that the trend is still in daily trend, there's no worries for the bulls. But as of course, we gotta be nimble, and anything can change within a couple of days. So we first of all, we only see a very small red flag. That's it, and so we just gotta um, deal with what we have in front of us and not predict, as in like when we trade, we probability is on our. We want probability to be on our side. So currently, after this day, the probability of potential a bearish week for this week increases. So we just gotta be notable of that. Just like this one wasn't that bad, to be honest, compared to this one. This one was initial sign of where we made a higher high. You can see we broke these priors high, and then there's not a lot of follow through. We came back right into it. So that was a little bit of a red flag, and then bears came in a little bit, and we'll have to see if bears do come in tomorrow or not. See the last as well on QQQ and SPY. You can see all the bear volume come in as well in the last 20 minutes over here. See how this bear volume comes. Key for me is, can the bears actually change the hourly trend change to their favor? We have not even seen a hourly downtrend yet. This move was good. We could have set a hourly downtrend if we broke with the prior lows, but we did not. We just didn't do that. So this was a good move. And then we were supposed to break it down, but nope. Bulls took over and went from a neutral trend back to a hourly uptrend. So the first thing I want to see now, we have a big enough move to form an hourly uptrend, a downtrend now. So on the next bounce, can the bears actually take it down to break the prior lows and form a hourly downtrend? That's the very first thing I'm going to be looking for the bears. And if you're a bull, your hourly uptrend will be continuing your guides. You can see this hourly uptrend is continuing. So this high is higher than this high. This high is higher than this high. So it's a higher low, higher low, higher low. So if we do form another higher low, then there's no worries for bulls. We'll hourly uptrend is your guide for the bulls, and the bears needs to form their very first hourly downtrend. And so that's what I'll be looking at. And another thing I've noticed in the market is, other than the heat map, the probability of rates are changing quite a bit after this week. Originally, this was like at 10% of a rate hike. Now it's at 20, but it just came back to 17 just after market close. But the key for me was I was looking at this probability where in July, it was actually, September. And we were pricing in rate cuts after rate cuts, after rate cuts for like the past couple weeks. And now after, I think just either the Fed's been just talking a lot, that's saying they're not going to cut rates for later this year. They just want to hold. And it probably is starting to shift into a more of a hold. You can see it's a hold, and now it's a cut and then a hold and then a cut, cut. And it used to be cut. Every cut is at 25 basis point, but now the probability is starting to shift back a little bit. And you can see potentially this one may shift back to a cut. So we'll see, because it's 40 versus 40 pretty much. So we'll see how that goes. But if this starts to shift a lot more, then market needs to reprice in all of this no cuts or whatever cuts they decide to price in. So if I do notice a big shift on this again, then I'll let you guys know. But as of now, the for price action, which is the most important, because all the emotions, all the news, all the is priced into the price action, and because everybody takes in those informations and they decide if they want to click the buy or sell button. So price action is still always king. So the very first thing I want to look at is the hourly trend change for the bears and hourly continuation of the uptrend for the bulls. And as of now, that's what I'm seeing. And if you guys got any questions and comments, feel free to comment below. And I will see you guys tomorrow. If you guys made it this far, feel free to subscribe and have a great rest of your day and go out and enjoy the sun because it's beautiful outside. And since the volume has been quite low, but it actually is going to might pick up tomorrow. So be ready for later this week, because volatility is definitely looking to start to pick up due to the how tight we have been. And so if we once this tightening range breaks, there's going to be a lot of volatility. So be prepared to start your trading plans and set your stop loss targets and all that stuff. And yeah, enjoy the rest of you guys today, and I'll see you guys tomorrow.